Hello, my name is Jimmy O'Brien. I'm a senior in the AIM program covering domestic industrials. Today I am pitching Standex International Corporation be added to the AIM small cap equity portfolio at a price target of $71.71. Standex International Corporation manufactures a diverse portfolio of products for various end markets. We derive the revenues from 5 segments: Electronics Products Group, Engraving, Engineering Technology, Specialty Solutions, and Scientific. The Electronics Products Group is a provider of switches, sensors, magnets, and relays. Engraving creates textures and surface finishes. Engineering Technology produces turnkey metal form solutions. Specialty Solutions is a collection of 3 businesses which provide merchandising solutions to retail and food customers, manufacture pump solutions, as well as hydraulic cylinders. Lastly, the Scientific segment is a provider of temperature-controlled equipment for healthcare and laboratories. Standex International has a diverse portfolio of market-leading niche products that serve a wide range of end markets. These end markets include consumer and general industrial, healthcare and life sciences, automotive, aviation, and other. Most of these markets have been negatively impacted by the COVID-19 pandemic, which has resulted in Standex's shares declining by almost 26% year to date. This price drop creates a good entry point as the economy is recovering and Standex's underlying business is still intact and extremely strong. Standex prides itself on operational excellence by growing their operating margins both organically and inorganically. To accomplish this, Standex has implemented a value creation system as a blueprint for assessing their various businesses' market position, value to customers, trajectory, and operational functionality. Standex then recognizes adjacent markets that they can access by moving up the value chain or by completing bolt-on acquisitions. Recognizing an opportunity in the $2.6 billion automotive coating manufacturing industry, Standex has completed 3 acquisitions since 2018, growing to an 18% market share position. The market share will grow further as their Moldtech 3D printing and geographic reach are superior to competitors. Furthermore, Standex is proactive in divesting underperforming business lines, selling off 4 in the past 6 years. The value creation system is successful because of the strength of Standex's balance sheet and financial flexibility. Standex has ample liquidity with $118 million in cash and over $200 million available under their revolving credit facility. The company is not over-levered with debt to equity of only 33%, net debt to EBITDA of 1.2, and interest coverage at 8.6. Given Standex International's corporation's improving market conditions, operational aptitude, and strong financial flexibility, it is recommended that Standex be added to the AIM small cap portfolio at a price target of $71.71, representing above 20% upside. Now moving into my drivers. My first driver is a vaccine tailwind for the Scientific segment. One of the major challenges of the COVID-19 vaccine is how and where to store the large quantity needed for the general population. Vaccines need to be held at cold temperatures, sometimes well below 0 degrees Fahrenheit. When a COVID-19 vaccine is released, there's going to be a large spike in demand for refrigerated storage in pharmacies, medical clinics, and other places that administer the vaccine. Standex's Scientific segment is a major manufacturer of laboratory medical-grade freezers and cryogenic storage tanks. With flu vaccines and the near-term potential for a COVID-19 vaccine, the Scientific segment should receive a strong tailwind throughout 2021. This will be extremely profitable for Standex, as this segment's operating margin is a robust 25%. My second driver is trimming the fat. In the past 18 months, Standex has divested their Cooking Solutions and Refrigerated Solutions group for $110 million and $11 million, respectively. Combined, these business lines generated $200 million in revenue, but only generated single-digit EBIT. Standex has been working towards reducing their exposure to the food industry, recognizing that it has been detrimental to their overall profitability. With these divestitures, Standex has been able to increase their operating margin 200 basis points, which will lead to future increases in their ROIC and improvements in their long-term growth prospects. Furthermore, these moves allow management to focus on their more profitable businesses, which have operating margins ranging from 10 to 25%. My final driver is inorganic growth. Historically, Standex's management team has been very successful and active in the M&A market, acquiring 10 companies in the past 5 years. They focus on acquiring companies that complement their already successful businesses through similar end markets or moving up the value chain. Standex has made 3 deals in the engraving segment, 3 in the electronic segment, 1 in scientific, and 1 in engineering technologies. In total, Standex has spent $363 million for these acquisitions, an average EBITDA multiple of 7.9 times, which has added $45 million to the 2019 EBITDA. Previously, Standex has used cash and their revolving line of credit to fund their acquisitions, maintaining a strong balance sheet with low leverage. Given their previous success, Standex should be able to continue to grow inorganically throughout their various segments. Moving now into risk. The first risk is COVID-19. The coronavirus is expanding and likely will continue to be an unpredictable force on Standex's operations. Although demand has begun to pick up, a resurgence of cases globally and a new economic shutdowns would have an adverse impact on their profitability. Second risk is global risk. Standex operates in 66 locations outside of the United States in both developed and emerging markets. This makes Standex subject to currency risk, political risk, and changes in regulations for their manufacturing. Finally, they have cyclical end markets. Standex's end markets are cyclical in nature, and some may take a longer time to recover than others. This would have an adverse effect on Standex's growth, but by diversifying their end markets and not relying too heavily on any single customer, Standex has limited the exposure to any single industry. Now for valuation. In order to reach an intrinsic value for Standex, a 5-year DCF model was created using a terminal growth rate of 2% and a WACC of 6.72%. An intrinsic value of $70.19 was reached. A 100 basis point sensitivity analysis on the terminal growth rate and WACC range from $42.90 to $86.09. Additionally, a PE multiple valuation was calculated using a 4-year 1 PE of 16.45 times and a peer average PE multiple of 24.3 times, resulting in an intrinsic value of $87.30. Lastly, an EV to EBITDA valuation was created using a 2020 estimated 11.75 times value for Standex and a peer average of 14.05, resulting in an intrinsic value of $59.17. By weighing the 3 models 50, 25, 25, a price target of $71.71 was reached, representing a 21.2% upside. Standex dividends yields 1.5%. Lastly, I will talk about Standex's management. David Dunbar is the CEO, president, and chairman of the board. He joined in 2014 and has almost 30 years of experience. Ademir Sarkevich is the CFO, VP, and treasurer. He has a Bachelor of Science from Bridgeport University and an MBA from Arizona State. Lastly, I'll talk about Jim Hooven, who joined Standex this year. He has over 30 years of experience in HR and supply chain, and they brought him on in order to improve their operational ability and their overall supply chain.